Welcome to TheoTrade. This is Don Kaufman. Here we are. It's April 5th, 2017. Well, S&P's in this trading session down 9. But if you missed the trading session, people, you missed it. There was some volatility of firing today. Let me tell you, the table is now set for volatility. And let me show you exactly what I mean. And that's really going to be a big portion, of course, of today's kind of Theo Night video. Yeah, the table is definitely set over here. So first and foremost, let me go to the S&Ps. I've been talking ad nauseum lately about the 2349 level inside of the S&P futures. And the irony is today, just, 4 or 5 minutes ago during the cash close, literally we closed on 2349 on the button. Wouldn't surprise me to see some more sell side activity. So we're hitting this huge inflection point inside of the S&P futures, clearly and decisively getting under 2349. Okay. And when I say under 2349, yes, I realize we're at 2348 right now. A few points though under 2349 could really give us some activity to the downside. It opens the door wide open all the way down to the 2300 handle. That is, and when I say handle, I mean points. So that could actually open the door to S&Ps at 2300. Take a quick glance at some of the trade. Again, some of the trade over the last 30 days. This particular chart just happens to be that. It's 30 days set at 1 hour. And again, you can see these kind of key inflection points we keep hitting at 2349. Crossing through it, of course, has been met with rather extreme levels of implied volatility. We can go back even 30 days and even a few days prior to that and see evidence of it, again, 30, 40 days back in time. Again, volatility really kicking in below the 2349 level, but that's neither here nor there. If you missed today's trading session, when I'm talking about volatility, we had kind of a wild and woolly intraday reversal. And we haven't seen an intraday reversal the likes of this in quite some time. We did, in fact, trade to the 2375 level today and completely reverse. Now, do some quick math over there. You're like, yeah, that's a almost 30 handle. That's 30 S&P point reversal. Okay, fairly substantial out there. However, the volatility inside of the S&Ps, that was nothing. You should have seen what happened inside of the Russell product. The Russell was trading at 1382 in early trade today and actually closed pretty much to the lows of the session to 1349 where it currently resides. Again, you're looking at like a 30-point move on a product that's only 1300. It closed down 1.4%. You start talking about, 2-3% moves, you're starting to get some statistical significance. Moving on down the list over here, okay? When I say the table is set for volatility, all right, they were buying volatility to the close today like it was going out of style, but that's neither here nor there. Hey, this is just a little blip on the radar of volatility. What's way more impressive is if you look at the vol skew, and I've been talking about this again, day in and day out, okay? Something changed in recent markets, and there's a specific date. The big sell side day we had on March 21st, what changed was very simply the volatility from the 14-day, okay, to the 42-day. This is April volatility futures versus May volatility futures. Now, typically, there's a 1-point differential between April and May. Right now, they're trading at the same level. It's 1375. When you have a flat volatility skew, that means that 14-day risk is the same as 42-day risk. Is that even possible? Yeah, it is possible. The volatility has actually flattened out, and it's a possibility that we even see this 14-day go above the 42-day. That would actually imply extreme levels of risk hitting the marketplace. And we're right there. Again, the table is set. In fact, here we are in the after markets, and you can see we're continuing to trade lower. So a couple key points I want to make. Number one, we have the S&Ps now below, all right, the 2349 level. It's a huge inflection point. There's going to be sell side activity below 2349. We're starting to break lower. Number two, we have the volatility futures Table set in the volatility futures. They're actually indicating, all right, we flattened out the skew. We're ready to rock. Number 3, bonds. If you've missed the bonds, 152 is absolutely critical inside of the bonds. What I'm doing over here is just adjusting for contract changes. Hit apply, hit OK. Adjusting for contract changes, the bonds closed on their inflection point of 152. When I say like the table is set over here, look at how key that level is. The bonds at this point, if you're like, okay, so why is it such a big level? If the bonds break higher from where they're basically at over here, that's an overall sell side signal to the entire S&P 500. Specifically, it's going to tag the XLF, the financials. Okay, the financials, they're not going to like it. The bonds rallying is going to take the interest rates lower. It's going to be all over but the crying at that point. So taking a look specifically at the financials, you're thinking, they got out of this relatively unscathed. But the financials, they haven't recovered from that March 21st sell-off over here. We're right back to the edge of the March 21st sell-off, back down to 2350. Another key inflection point over here. But wait, it gets better. So we've got the bonds at an inflection point. The S&P's under, okay, their huge inflection point. The volatility futures here, I just want to be clear. These things are still open for another 5 minutes, and they have flipped over. We're actually in a full-blown backwardation right now where the short-term vol is above the longer-term vol. Everything is starting to scream, sell it. If it ain't nailed down, sell it at this point. Last, but definitely not least, the VVIX. Okay, it's the volatility of the volatility index. Do you think somebody was getting a little nervous here coming into the clash close? Again, if it wasn't nailed down, all right, sell it. And in this particular case, they're buying volatility like it's going out of style over here. That is a 10% move, nearly a 10% move up in the VVIX, which is the volatility of the volatility index. All your volatility products are lit. All of your major index products are at key inflection points or under. Bonds, the table is set. We're ready to rally above 152. If you don't look at this for what it is, okay, you're missing the bigger picture over here. You need to be a little nervous right now. What's the product, obviously, that got hit the hardest? The Russell. Again, my single largest position happens to be in effect in the Russell. I'm short a 3-lot in the I'm actually short a 2-lot in the S&Ps, a 3-lot inside of the Nasdaq futures, a 3-lot inside of the Russell out there. I'm still in, a few minimal bond positions. Nevertheless, the Russell has already gotten whacked. If you're looking for a product, once again, you're like, I need something to get short. Yeah, here's your suspect right here in the Nasdaq. Again, sell what's not nailed down pretty much at this point. The Nasdaq, wild reversal off of an all-time high. If you're looking for like a sign, is this it? This could have been the blow off top today. And we're not going to know that for quite some time. Forming a top out there, it's a bit of a process. Bottoms in markets are wild and woolly events you never forget. Tops can be kind of a process, but again, cracking all the way to 54.80, 81. Well, I'll tell you what, if that's a process, I'm in. But this is still a product that is so ridiculously overbought at this point. Again, if you're not short markets and looking for a product too short, the Nasdaq is the usual suspect. Thanks everybody for joining us here at TheoTrade. Again, keep your head in the game. We look like we're headed into some pretty serious volatility here in the next few days. Have a great evening. Bye-bye.